Hello traders and welcome to another video review. Today is Wednesday, May 8, 2024. Let's have a look at economic calendar today. Overnight data were in form of the Japanese 10-year GDP auction that went at 0.857%. We got already data from the German industrial production is better than expected, minus 0.4% versus the minus 0.6% expected, but it's way below the last reading of 1.7%. At 9 a.m. there is a scheduled meeting of the European Central Bank, so that might be quite interesting. Mortgage rate from the UK is scheduled for release at 11 o'clock, and then we got the data from the US. Almost nothing here, to be honest, except one very important data release. Crude oil inventories are scheduled for release at 4:30 together with the Cushing crude oil inventories. So not that busy New York session, US session whatsoever. Let's start analysis with the euro dollar, and then we will definitely take a look at the crude oil and the other markets. Euro dollar is actually moving lower as expected after the bearish engulfing pattern has been made with a top at the level of 1.0813. We reversed here, then tested it again, then bounced in from the level of 1.0754 again towards the technical resistance. Finally, we broke below the local technical support. We are now testing the lower levels of the demand zone, 1.0740, and it looks like the bears wants to go towards 1.0728 intraday technical resistance based on the 100 periods moving average. Any breakout below this level opens the road towards the other technical support, 1.0667, 1.0657, 1.0649. Please notice that we were rejected from the trend line as well. So if we zoom out, you can clearly see that this is a very important trend line. If we disregard this euro dollar candle, weird candle. Now momentum touches the level of 50. We are now testing this level, so any violation of this level, of course, on the RSI would likely put the bears into the control of the market. Room to the downside is here, plenty of room to the downside is here, so it looks like the bears might accelerate the drop because bulls failed to break above the trend line again. So outlook for the euro dollar is bearish in the short term. Let's take a look at the crude oil. First, daily time frame chart. On a daily time frame chart, we are reversing. We are reversing from the 87.62, the local high. So I will just, there you go, place a line here, so we know that's a technical resistance. Now we're going lower. Already we've made a new local low, 77.55. That's the yesterday's low. But please notice that we are very, very close to hit the extremely oversold conditions on a daily time frame chart. Let's find out how much did we retrace of the last movement to the upside. So that's the low and that's the high, right? So we retraced 50% exactly. So 50% is located at 77.81, maybe 77.80. Local low 77.55. So that's 25 pips lower. The next target, 61% of the Fibonacci retracement, 75.36, and this might be the level that that might cause some attention of the bulls, because let me just place the 61% Fibonacci retracement. Okay, so that's the level. Let's call it black. So the situation here is that we might go we might go lower. If I will get my arrow, okay, so we might go lower towards this level, and please keep an eye on this level because we might see some kind of a bounce from the 61% of the Fibonacci retracement because this is the extremely oversold area, right? So we just need that this last little touch for the bounce. Now trend line might be plotted here something like this. That's nothing wrong whatsoever. Maybe this kind of a trend line would be the most accurate. Let's make it thicker. There you go. So you can see the market is bouncing, going higher. When the market bounces from the trend line, it's supposed to go higher. If it doesn't, then it's a fake bounce and we can expect a breakout. Finally, we reverse, we break below the trend line, and now it's clear that bears are in charge of this market. We should see lower levels. We are trading below 50 and 100 periods moving average, below the trend line, approaching last resort for the bulls for the immediate bounce, 61% of the Fibonacci retracement, roughly around 75.44. If this level is violated, then the other, let's say, scenario, the more bearish scenario, is that we are going to test the lows from the 2020 24, 23, 66, 67.71 basically. Okay, so please notice this situation on the crude oil. We are very, very close for the decisive level. Yeah, so that's the situation of the crude oil. If we talk about the crude oil, we need to talk about the gold a little bit. This is daily time frame chart. It's very clear that on the daily time frame chart we got this nice demand zone located between the levels of 2267, 2290, and on a daily time frame chart we can see the market keeps bouncing from this zone. Let me just make it a little bit more visible for you so you can see it straight on without any problems. So let's make it, of course, green because it's a demand zone. So I'm talking about this zone here. This zone is very important. It's a key zone for the market to test. Any breakout below this zone would likely put this recent rally into different perspective, because we might even expect the drop towards the 200 periods moving average. However, for now, it looks like the bulls are defending this zone, and nothing is going on right now. We got our orange. Let me just place it here. There you go. We got our orange trend line. So that divides basically the technical bullish market from the technical bearish market. For now, we got the bearish market momentum is barely above the level of 50. Right now it's 52 points only, so the bears might still try to move lower and test this level. And last but not least, S&P 500. S&P 500 bounces from the 100 periods moving average on a daily time frame chart. Local low and swing low 4,953, first bounce, test, and the second bounce closes above the level of 50 periods moving average, 5,159. Yesterday's high 5,199 might be challenged even today. So the next target for the bulls is obviously the level of 5,274, the technical resistance. It looks like we retraced more than 61% of the Fibonacci. On the Fibonacci, right? Am I right? The other way around. Sorry. This is it. So this goes here and this goes here. So yes, we passed the 61%. We are now trying to test the 78% of the Fibonacci retracement. This is the high, but the 78% is roughly around 5,206. So last really last chance for the bears. If we break below this level, then bulls will attack the highs from the April 2024. If not, there is some chance for the pullback, but with this kind of momentum, it looks like the bulls are in charge of the market. The one thing that might get a little bit of the suspicion of on this recent move is the three wave basically pattern building here. Okay, so for now, there are only 3 waves here, ABC. We need a 5-wave reversal pattern, impulsive pattern to the upside, in order to confirm that the market has returned to the uptrend. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye-bye.